Good morning. It's Jeffrey Christian of CPM Group. It's not quite 9:25 on Tuesday, the 7th of February here in New York. Gold and silver prices are consolidating around recent levels. I'm going to talk today about the importance of accurate data. The subject has come up recently. It's a subject that we don't necessarily like to talk about. We like to live in a world where we provide our services to our clients and we market our services to potentially interested clients. And we tend to try to ignore a lot of the static and noise that comes from other parts of the market. We live in different parts of the market, and we have different groups of people who compete with us in providing information, statistics and data, research and analysis, and price projections. And we try to do the best on our side and ignore other people. Sometimes you can't ignore them. So why talk about this now? Well, there's several recent and current developments that have refocused some investors and market participants and market observers on the issue of good research, data and analysis, contrasted to bad information. One recent example is that the Ghanaian government, which has actually been talking about doing this for well over a year, in January started a program called Gold for Oil, in which they said they would pay for imports of oil products, primarily diesel fuel, that they don't produce themselves. They would pay for the imports either with gold that had been mined within Ghana and sold to the central bank, or they would take gold that they have bought from domestic mining, sell it, and then pay for the oil with dollars. It's a program that was designed because the Ghanaian government is chronically short of dollars and chronically short of diesel fuel. It needs to import diesel fuel so that people can live and companies can work and trucks can drive, but it also needs foreign exchange to pay for that. It has a shortage of US dollars and foreign exchange in general. So it said, look, we have this gold, let's mobilize it. It has virtually nothing to do with the conspiracy theory it's not a conspiracy theory, it's just a nonsensical view that the dollar is about to collapse and go away and no one's going to use it for anything. If you look at the agreements in the Gold for Oil program, the oil is denominated in US dollars, the gold is denominated in US dollars, and the exchange is either oil products for gold or oil products for US dollars raised by selling the gold at the price. So, but that said, you have any number of these pundits on the internet talking about how the dollar is collapsing. Look, the Ghanaian government is paying for its oil products with gold. It's just not an accurate representation of the world. There are several other things that are going on at the time. Unfortunately, in my mind, some people are dumping on a person who has been he's been a thorn in my side because he said a lot of very rude and stupid things about CPM Group and me personally. And people are complaining about him because they realize he's just a shill. I actually spent 3.5 hours with him in May in Vancouver talking about his company and my company. He had been asking me, he came into the silver market in 2021, and he's been asking me if I would talk to him or be interviewed with him since then. So we talked for 3.5 hours in May, and I agreed to do it. And it was very interesting because I asked him about his company, and he had no interest in silver. And he said, I really don't care about silver. And I asked him about the idea that people were listening to him on the internet and they were losing money because they were making bad investments. He said, I don't care about them. The only people I care about are the companies that pay me to sponsor my internet and my Twitter and everything else. Those are my customers, and that's what I pay attention to. I said, well, you're trying to grow the company. And everything that he said about trying to grow the company was getting more viewers because that brought him more revenue. Nothing about raising the quality of the information he was putting out. We did an interview. I had the right to edit it. And after several days, they came back and said, no, we're not going to run that. It wouldn't be good for us to run that interview. And it kind of bothers me that people are, well, I'm glad that people are catching on that he's, just a real shill and a snake oil salesman and does a lot of things that people are saying is inappropriate. But unfortunately, no one is saying, yeah, and the stuff that he said about silver is dead wrong. It's nonsensical, and it's cost a lot of investors a lot of money. I guess people don't care about the quality of it. There's an old joke about Catskill food, two old ladies at a Catskill resort, and the one says, this food is terrible, and the other one says, yes, and the portions are so small. I don't care if the quality of the silver and gold information I'm getting is absolute garbage. I just want a large portion of it. I want to be constantly reassured that all of these things I believed about the world collapsing and silver going to $1,000 and gold going to $10,000 is true. I've got to believe this, and I have to have a constant reassurance. So shovel it in. So it's time now to talk about it. And I'll talk about a variety of levels. Back in the late 90s, we were working with virtually every major gold mining company in the world. And we were talking about the gold market and promoting gold and getting gold into investors. We actually wrote a letter in August of 1998 to the World Gold Council suggesting that they create a publicly listed gold fund that would hold allocated gold and try to stimulate investment demand rather than jewelry demand, which is what they were promoting at the time. And in those discussions, one of the comments I made was the bad quality of data in the gold market. And one of the gold producers said, oh, you're talking about all the conspiracy people. I said, no, I'm talking about the mainstream providers of gold supply and demand data that is given away to investors for free, and the investors rely on it, and it's just full of errors. So there are different levels of errors, and I'm going to talk about that today. But I really want to talk about CPM Group's work and why we work so hard to have good data and how our good data is reinforced. The idea that our data is in fact good and accurate is reinforced by the fact that we use it to project prices, and we've used it to project prices since 1980, and we have a pretty darn good track record of projecting prices based on our data. And that tells us that our data is more likely correct than it is incorrect. Other people might have data that tells you that the gold price should be $10,000, but it isn't. And it's not $10,000 because of some conspiracy to suppress it. It isn't $10,000 because the economics of gold supply and demand don't support $10,000. So there are questions of related to the accuracy of the free data provided by groups that market and promote gold, silver, and platinum investments. There's a preponderance of histrionic opinions and unfulfilled promises from the snake oil salesmen, as I call them, or the carnival barkers, about massively higher prices. And that has turned off many investors for decades. But given the strength in gold prices, which were a record annual average price last year, for all those who are bemoaning the low gold prices, the annual average price last year was a record level. And silver at $23, $25 is not that bad. But mainstream investors are looking at gold and silver. They're looking at research that CPM Group has produced on the rightful role and the optimal amount of your assets that you should have in gold and silver. And they're saying, hey, I should probably be moving into precious metals. But then when they start looking at it, they say, oh my God, this is garbage. We issued a buy recommendation for gold, intermediate and long-term gold buy recommendation for gold in November of 2000. We said the economic and political and financial environment for the next several decades is going to be worse than it was in 1978 to 1980 when the gold price went from $200 to $850. And gold prices, which in November of 2000 were about $270 an ounce, gold prices are going way past the $850. They're going to new record prices. This is the golden renaissance, we said. Investors are rediscovering the value of having gold in their portfolios, and politicians around the world are going to give them ample economic and political reasons to buy gold, and that's going to drive the price high. This was in November of 2000. We had a large hedge fund manager here who said, you know, Jeff, before I take your advice and invest in gold and gold shares, I want to talk to the CFO of a major gold mining company. And we tried to arrange for him to meet a guy that we really respect. We just couldn't get the calendars together. So ultimately, he went out west and he said, hey, I went out west and I met the CFO and the CEO of one of the world's largest gold mining companies. And he didn't talk with me. He had a Texas accent. He said, I'm just a simple guy from the oil patch in Texas. I'm not a gold expert, but I can tell you one thing. I know more about gold than the CEO and the CFO of one of the world's largest gold mining companies, and it would breach my fiduciary responsibility to my investors to put money of theirs into such a industry that knows so little about itself. And that was 2000. He did get into the market once the price started rising, missed the first 10 or 15%. But that is still the case in the gold market in 2023. And these mainstream investors are coming to or returning to the precious metals market now, and they're appalled by the obvious misinformation, misunderstanding, bad information, bad data, and obviously inaccurate analyses. So that's why we're talking about it now. And I'm warning you now, this will be a long presentation, but please stick around to the end. So why listen to us? We have experience, we have knowledge, we have global contacts. We're plugged into the markets. We provide financial advisory services like hedging and materials management and prepaid forwards to producers and smelters and refiners and industrial users and leasing arrangements. And that gives us insights that you don't get if you're on the outside of the market looking in. We also have a tremendous amount of integrity. We've never violated a confidence, and we have a lot of them. A lot of our confidentiality agreements are perpetual. I take this stuff to my grave, and if I violate it, the grave comes earlier. And we're unbiased. People pay us to be right, not to be bullish, not to be bearish. And we've been successful in our research and analysis since the 1980s. We sell information, research, data, knowledge, and the application of them. We do not sell silver or gold, precious metals, or precious metals mining stocks. That's why you listen to us. We've been around. Our operation actually goes back to the late 60s, early 70s with the silver report in the top row. Went into that was J. Aaron. Started our research department. We ran it at J. Aaron, the big blue thing on the top. Then we went into Goldman Sachs when they bought J. Aaron. We spun off of Goldman Sachs in 1986. We started producing our own books, the Silver Survey. You can see precious metals, silver. We were producing that on a quarterly basis. In 1989, the Silver Institute asked us for if we would produce a stripped-down version. That became the World Silver Survey. We did it under an initial 5-year contract. We had issues with the Silver Institute. They wanted us to be more bullish. They wanted us to include investment demand with fabrication demand. They didn't want us to say that there were billions of ounces of inventories of refined silver above ground. And so after 5 years, we stopped doing the World Silver Survey. We continued to do ours. It became rebranded as the Silver Yearbook around 2005, 2006, and we've been doing it ever since. And it's published in Chinese, too, by the Huatong Silver Exchange. So we've been around for a long time. We have a lot of knowledge and a lot of experience. Free research. Ask yourself why people tell you things. I studied journalism in the university, and one of the things you learned at the University of Missouri School of Journalism was always ask yourself, why is this person talking to me? Why does he want me to know whatever it is he's saying? He or her. Why people put their time and effort into making this information to you? Are they trying to sell you something? We are. I'll be honest. We're trying to sell you research and consulting. We've been clear through all these videos over the last several years to touch the surface of the same things that we talk about in our paid research that we provide to corporate and retail and institutional investors. And we've built our reputation on being accurate and being able to justify with data our conclusions, our price expectations. We have other motives. We try to bring new investors into the commodities markets. We happen to think that commodities, especially gold and silver, are good for investors to have. We understand why mainstream investors don't want to participate, and we try to work with them to say, even though a lot of people treat gold as a religion and silver as a religion, we think you can treat it as a quantitatively driven investment. I said that to Leon Cooperman when the day that Goldman Sachs announced that it was buying J. Aron. He said no, but he learned. Since the 1980s, we've worked with a broad range of miners, refiners, and dealers in an effort to attract mainstream investors. I mentioned the work in 1998 to 2001 with gold producers. That was sort of off to the side of the World Gold Council. But most of the members of the World Gold Council were in that group of gold mining executives that we were working with. We did work with the World Gold Council, as I said, somewhat, and we did provide them that letter in 1998 about how they should be stimulating investment demand if they want the gold price to rise, because jewelry demand is negatively correlated to prices. If you stimulate jewelry demand, jewelers will use less gold if the price rises. We have unparalleled work on gold and silver in diversified portfolios. And that's the kind of information that mainstream investors want. These are our silver buy and sell recommendations since 1980. You can see from 1980 to 2000, 2005 or so, we were on and off again. About 68% of the time, I think we were saying don't buy silver. If anything, go short silver. We flipped, and from 2005 or so until 2011, we said buy silver. 2011, actually the last week of April 2011, we said sell it. And then in October of 2018, we said buy it. So it's a pretty good record, and it's based on our fundamental research and analysis. Contrast that with people who have been telling you throughout that period of time that gold's going to 10,000 and silver's going to 100. What are they basing those projections on? We've done this work on gold's optimal role in a portfolio, and you can see 25 to 30% of your portfolio ideally would have been in gold from 1968 to 2020 to have the optimal risk-reward ratio. With silver, it's about the same. Now, let's talk about errors. There's a lot of reasons for bad data. There's honest errors in secretive asymmetrical markets like gold, silver, and platinum. There's just not a lot of good data out there. There are mistakes in data gathering. Analysts have been misled by market participants who tell them bad information. Hey, how much gold do you have in your depositories in London before 2016 when that information became publicly available? Then ask them that question. They said, how much gold do you have on your gold book? Well, your gold book or your silver book has not only the metal that's in a depository someplace, but the metal that you bought on a forward basis, the metal that you've leased out to people, the metal that you own that is distributed throughout the industry, metal that you have put aside as collateral for investment products like bonds and notes and managed accounts. You ask the wrong question, you get the wrong answer. Deliberate prevarication, it's out there. There are three types of chicanery. There's the promotional and marketing information that's disguised as real research. Market reports that are telling you, hey, gold and silver and platinum, they're in deficits, the market's tight, you gotta buy this stuff, it's really gonna be strong. They're the pundits who simply don't know what they're speaking about. They promote themselves, they promote ideologies, they sell their newsletters. There's a guy whose first newsletter on interest rates was in 1981, and he said the US Treasury market is going to collapse. 1981, 43 years later, he still got the same message. And he has about 200,000 true believers who listen to his every word because they're sure that while it's taken 42 years to collapse, that doesn't mean it's not going to collapse. Wow. They're the outright liars. Guys who just get on the internet and start saying all kinds of stuff. And then there are people who really do try to do good research, but they get it wrong for a variety of reasons, including they're basing their research on skewed and distorted free data from promotional organizations. One of the reasons a lot of institutional investors buy our research and data is because when you plug our research and data into your econometric model, it makes sense. And it can be used to say, back test and say, wow, okay, I can see why the price did what it did. And it makes sense in using it for projections. You plug that other data in there and your computer goes wild. Free research. That's not research, that's marketing material. You have to ask yourself, why is this person telling me this? And why is he giving it to me for free? On our website, there's a market view section. In the market view section, there's a subsection called the importance of accurate data. You will find in it 3 documents, at least 3 documents. The 3 that I tagged here are what I wanted to talk about. One is from 2003, and 2 of them, one's an excerpt of the other one, are from 2014. This has been a topic in the market for decades, forever, because gold and silver are secretive. The markets are clogged with bad data and analysis. These are from a 2014 presentation when somebody who knew how to advance things made this chart. The Fed won't let the Bundesbank have its gold for 7 years. That's not what happened. We brought the director of foreign exchange and gold operations for the Bundesbank to New York to give a speech at the physical briefing we used to have for our gold yearbook in 2014 about what was really happening. You can watch that. There's a video of that. It's about a 2-hour briefing, but he shows up at the 1 hour, 6-minute mark. You can watch that and you can learn. COMEX will run out of gold. That was in 2014. Hasn't happened yet. All the gold in London and Zurich is going to Asia. More on this in the next 3 slides. And higher interest rates will push prices. That was in 2014. Nominal interest rates remain close to 0 for the next 7 years, and real rates remain negative. Why were somebody saying that higher interest rates were going to push gold prices lower? Not because he knew anything about finance and the interest rate market, but because he had an ideology which told him interest rates have to skyrocket. His ideology was wrong. Okay, you can't see this table, but I put up above Swiss net imports from 2008 through the 3rd quarter of 2022 were 373 million ounces. If you could see this, you could see, yes, there was a lot of gold exported from Switzerland over that period. But there was even more, 373 million ounces more, imported into Switzerland. What does that mean? It means that the amount of gold being stored in Switzerland, mostly by investors, was rising by 373 million ounces. Switzerland was not running out of gold, and it's still not running out of gold. And you can see here, even after all of the stuff, 2009 to 2011, you can see net imports are still running in excess of 20 million ounces a year as investors stack up gold in Switzerland. Switzerland is not running out of gold. The next time someone says that to you, say, thanks, I got to go someplace, I'll visit you Tuesdays and Thursdays. Switzerland's not running out. Switzerland has net imports of 373.5 million ounces. Chinese investment demand over the same period of time was 135 million ounces. You can do the calculation, but it's more than double the amount. The amount of gold that's been bought by investors and stacked up in Switzerland is more than double the amount that has been bought on a physical basis in China over the same period of time, 15 years, I think it is. That's good data, that's good research. If you throw producer forwards in with your supply and demand, you will have overstated the amount of silver supply from 1987 to 2022 by about 320 million ounces. I don't have my glasses on. Sorry about that. 314 million ounces. And you will have overstated the physical demand by another 252 million. 500 million ounces. I can tell you why this error has come into the market starting in the late 80s, adding producer forwards as a form of spot physical supply. They're not. And I can tell you why it happened, and I can tell you about the meetings in 1989 and 1999, 2000, and 2015, 16, where gold producers who were members of a promotional organization that put this out in their gold data said, well, where's the physical metal come in forwards? And they had bankers tell them, we don't use physical spot supply for forwards. Forwards are a paper transaction, if you will. It's like a mortgage. And what about all the forwards that are used by smelters and refiners and industrial users and some institutional investors on both the buy side and the sell side of the financial markets? Why not count them if you're going to count producer forwards? I won't bore you with the details. This is silver. You've added 500 million ounces here. And this is gold. You've added several hundred million ounces there. And this only goes through 2012. We did this work for a presentation in 2012, 2013, for some producers who were saying, why do certain groups have this enormous data of forwards, only producer forwards, as a form of spot supply? And we said, well, it has nothing to do with actual research. It's another example. We worked with a Western copper producer in the late 90s. And at the time, China's silver, or zinc, lead, zinc, and copper smelting and refining industry had grown enormously and had taken 30, 40% of world base metal smelting capacity. But the Chinese government still had rules that said, if you've got silver and gold in China, you have to sell it at a discount to the international price to an agent of the People's Bank of China, or buy it from it if you need it at a premium to the international price. So the smelters couldn't compete for international tenders of concentrates if they had a lot of gold and silver in it, because they had to use discounted prices for the metal. We worked with a Western mining company that had gold and silver rich concentrates. We worked with the People's Bank of China, and we set up a system where they would allow Chinese base metal smelters to bid effectively for precious metals rich concentrates if they said that they would export the gold and silver byproducts on outturn from the refinery. As a result, about 1 billion ounces of silver came out of this, China and went around the world in that period, say 2000 to 2008, 2009. We knew that it was actually metal that was coming out of concentrates that were mined outside of China. And if you added that in as supply, you were double counting that metal by 1 billion ounces. We also knew that it wasn't Chinese central bank sales of long-held inventories. So we didn't have an extra 1 billion ounces of silver to account for. If you have 1 billion ounces of extra silver in your spreadsheet from China and 500 million ounces from forwards, you got to put it somewhere. You know it's not fabrication demand, it must be investment demand. So the red bars here are CPM Group's estimates of investment demand, basically through 2012, 2013, when we did this research. And those little green dots at the top are overestimates of investment demand because where we're going to put all this extra metal. Now, the company you keep, who are you going to listen to? Somebody sent me a really cute cartoon the other day. It was a lady saying to her husband, so you're not upset with the people who have been deluding you for years. You're upset with me for pointing out that they've been deluding you. Who are you going to trust? Do they use justifiable research methodology? You know, HSBC used to have this book of commodities research, all kinds of commodities. It's a thick book, base metals, energies, agriculturals, and precious metals. And in all of them, they used Commodities 101. Total supply less fabrication demand equals surplus deficit. You don't include investment demand with fabrication demand in calculating whether the market is in surplus or deficit. And in gold and silver, they had forwards because they got the research for free. Do the projections change as information changes? Do they have target dates? We sometimes don't have target dates on our stuff. I mean, in the early 1990s, we said that we thought the silver price, which was dead in the water between 350 and 550, at some point would rise probably at least to $9 or $10 an ounce and possibly even more. But that it could be years from now because there was all of this unaccounted for refined metal that was coming back into the market at the time. I was accused of being part of a New York Jewish conspiracy to dupe investors by saying that I thought the silver price was long and that I was trying to help manipulate the silver price higher. Ironic. Are the people you're getting your information from perpetually bullish? Do they ever change their price outlook? Have they been wrong for years and decades? Do they rely on asymmetrical or nonsensical conspiracies and manipulations to explain why they've been wrong for decades? Obviously, I'm smarter than everybody else in the market, they say, and therefore, I have been right that the price would be higher, but there's some nonsensical conspiracy to suppress the price. And it's gone from Drexel Burnham in the 80s to Merrill Lynch in the 90s to JP Morgan, and now maybe it's Bank of America. And no one along that train of manipulation and suppression has ever come forward and said, hey, we did this. There have been maybe a dozen traders accused of spoofing the market, which can affect the price for as long as a minute or two. But there's been no evidence of these large, massive conspiracies. And if you ever take it to court, and some people have, and they've had their cases thrown out, the reality is that the banks own enormous amounts of gold and silver that they've leased out to industrial and investment groups. And they have it in their own best interest to have higher prices. Goldman Sachs just announced that it earned like $3 billion on its commodities trading last year because the prices were higher, not because the prices were lower. When Eric Sprott and others were trying to say, let's bankrupt J.P. Morgan, buy silver and drive the price high, J.P. Morgan had its record profits in gold and silver trading, because the higher the price, the better it is for banks. You got no motive there. So now you find a guy who actually is leasing cars in London, and he says, oh, I worked for J. Aron, and I know how they manipulated the price. The fact is, he never worked for J. Aron, and people still give him money to manage. You know, I live in two different markets. There's the real precious metals market, and then there's this one full of all this gobbledygook. And when we exposed that guy, I thought the major producers are going to be happy to get rid of him in the gold market. Well, first off, we didn't get rid of him. He's still in the business, and he's still saying nonsensical stuff. And people are paying him and believing him. Okay, you've been wrong for, well, he came into the market in 2010. Okay, you've been wrong for 13 years. Well, you know, these bankers are very powerful. I found one chief executive officer at a major mining company who knew who he was. Most of them didn't even know he was out there, didn't know that Eric Sprott and Eric King were promoting him as this whistleblower, didn't know that he was a fraud, didn't care that we had exposed him. That's the key market that I like to work in. People who actually know what's going on in the real market and how somehow or other have benefited from the ability to completely ignore all of the nonsense in that other market. Now, going back to who you don't listen to, are they so self-assured that they know more about economics and finance than the hundreds of thousands of legitimate professionals in the industries, in those markets, and in governments? I can assure you, they say, that the world's going to collapse. The dollar's going to collapse, the treasury market's going to collapse, the global financial system's going to collapse. You better get your money out of the bank by Thursday, because on Friday the banks are going to declare all money invalid. Do they know that an IRA is an individual retirement account and not an international retirement account? In 2021, when the latest group of losers joined the silver conspiracy business, they were trashing me. And I wrote a piece called "The Company You Keep." And I talked about some of this stuff. We posted it on our internet, on our website, and I invite you to read it. Here's the first two paragraphs. I have watched this market be attacked by purveyors of inaccurate information since I got into the market in the 1970s. I've been happy to say I knew Nelson Bunker Hunt. He invited me to his house in 1979 to talk about silver. I knew the people who bought his silver, and the people who bought it from them, and the people who bought it from them, and the people who bought it from them. I have been involved in transactions with mining companies that have been millions of ounces of gold and hundreds of millions of ounces of silver. I've been involved in all sorts of central bank transactions. I've seen how the market works. And it's not what the snake oil salesmen tell you. There's further resources. Look, we provide a ridiculous amount of free information on our website. That's our marketing. And what are we marketing? We're marketing the better research, the more detailed research. We're marketing research, analysis, and how to use that research and analysis to effectively manage your exposure to gold, silver, platinum group metals, and other commodities. We also have these free videos. We have the yearbooks that we charge for, but it's a nominal $160. And then we have the retail investor programs that we've rolled out. And this coming Saturday, I will be participating in Rick Rule's Silver Boot Camp, Silver Investors boot camp. At noon Pacific time, I'm going to be speaking for an hour about silver. Some of the same things that I have here, but a whole lot more. Real market, real silver market, supply and demand, inventories and investment demand. Join us. I mean, it's like $99 to participate for the full day. And you'll hear not only me, but Bob Quatermain, who created Silver Standard and created Pretium, and Randy Smallwood, and a host of other people who are really smart. So join. It's worth listening to. And then our yearbooks are coming up with the gold yearbook starting in late March. That's all I have for now. Sorry I took so long, but I think it's something that's worth really paying attention to because you want to get it right. Thank you. I'll talk to you later.